You know, what are some ways that an investor can say, I want to be a part of the solution? I want to try to not just help because I'm a nice guy, but I'm going to find a profitable way to help these people. What are what's probably the easiest barrier to entry into helping these people out?
Statistics tell us that this small landlord, this 1 to 5 house owned property owner, right? 75% self-managed, and statistics also tells Brian that 60% pay cash. So there's a lot of them that they own the house free and clear. They could afford to sell or finance it to you, Brian, because they have all equity. And they really made a long-term investment when they bought it. So they weren't looking to cash in. They were looking to get a check. Well, what if they could get a check via, an owner finance note where they finance you or I, Brian, to buy the property, and I could bake in all kind of clauses depending on the story and the situation. Even if I didn't have to start paying them today until I got the tenant evicted, it would relieve them of having to go deal with it. And now I've got a great long-term deal that I could rent the property down the road, or our strategy we love, Brian, we could resell it on a wrap note, and all of a sudden, boom, we build our own bank with it.
Well, guys, and that's what we've been saying is that, most people that got into the landlording business, they wanted to participate in the run up of the real estate business, but they only knew the bricks and mortar side, right? The property side of the business. They didn't know the note side of the business. And what they were looking for was passive income. And like you said, Eddie, the passive income, well, sometimes the invoices, overpowered the money.
Yeah, we really saw, and obviously you see this in the slide deck that we did today. Remember, you can get the slide deck. Just email us at info@NoteSchool. Just make sure in the body of the email to tell us which presentation it was, and we'll be glad to send it to you. And Joe, we eliminated probably another 2 times of slides. We just didn't have enough time to do them. There's a lot of stuff. There's a lot of overwhelming data and things that are being written, at least at the loan servicer trade journal levels, about what's happening out here. So Brian, it's a market condition. Did you hear me say that loan servicers have already written a check for $90 billion to cover bondholders' principal and interest payments and the borrower's taxes and insurance payments. So Brian, the servicer is paying taxes and insurance on the house that he's not collecting payments on. How's that work?
It's a bad day.
Well, and the reason they're doing that, Eddie, is because if they did not, then that part of the market would collapse too. And then that would just, big word, right, exacerbate everything else.
Yeah, and part of it is it's I think I'm right in saying this. It's the thing they wrote in Dodd-Frank that kind of put the lender at a little bit of a risk there when they have an escrow account. But the bottom line is, we are going to see a day of reckoning, I believe, with loan servicers, and so there is this shortage of credit, Brian, is not going the right direction. The shortage of credit is continuing to decline.